Good afternoon, everyone. Today is not just another podcast. It is the beginning of series we have dreamed about, worked for, and now launch right here in Romania. A series that will bring together some of the most important voices in global finance, alongside Romanian leaders, to do one thing: equip families, entrepreneurs, and the next generation with the clarity and protection they need in a world of rising risk. This is not theory. This is not marketing. It is about applying the tools of wealth management directly to the Romanian reality, live with facts, structure, and courage. We are living in a moment where headlines move faster than portfolios can adjust. Inflation is not gone, it is sticky, reshaping how families reserve purchasing power. Interest rates have risen everywhere, and what was once considered risk-free now yield equity-like returns. We must ask, why is the government paying 7 to 9% just to borrow? Fiscal pressures are mounting, from Washington to Berlin, from Paris to Bucharest, and from London to Zurich. And history shows us, when government face liquidity stress, the first cash they go is after domestic. In Romania, reality is becoming louder by the day. The Prime Minister himself has used the word default in public, something leaders do only when the pressure is already real. For Romanian families and entrepreneurs, the challenge is twofold. Local concentration risk. Most wealth is here, in deposits, real estate, and state bonds. That means when fiscal rules, taxes, or currency regime changes, there is no buffer. Global exposure gap. Unlike families in Switzerland, Luxembourg, London, or Spain, Romanians are only beginning to access structured portfolios, cross-border funds, or insurance-based planning that can shield them from local shocks. This is why education is no longer optional. Wealth management is not a luxury, it is a necessity. That is why today we launched this podcast, because Romania deserves more than silence, more than short-term thinking, more than financial improvisation. Families here deserve the same access to knowledge and protection that families in Geneva, Zurich, or London take for granted. And we will not only talk about concepts, we will dissect real Romanian cases. How to think about titoli de stat when they yield like equities. How to diversify without abandoning Romania. How to prepare for wealth taxes, capital restriction, or policy shocks before they arrive. We promised to bring world-class financial education for free. Now we go further. We bring the world's leading voices directly into Romanian living room. And to launch this journey, I'm deeply honored to welcome a voice that carries global weight, Charles-Henri Monchau, Chief Investment Officer of SYZ Private Bank. Charles has guided families and institutions across continents through crises, recoveries, and financial storms. He has visited Romania, listened to families' concerns about inflation, taxation, and fragile, safe assets. And today, he joined us not as a guest, but as a partner in building resilience here when it matters most. Charles, thank you for being with us. Romania is listening.
Thank you so much, Charles, for the invite. I'm very pleased to be again with you in this webinar.
Thank you so much, Charles. I will have some questions, Charles, for you. So I will start with one very essential question. Why Swiss bank look to East? Many Swiss banks, Charles, are now looking east to countries like Romania. Why does it make sense for Swiss private banks to engage with Eastern European families through partnership with local regulated entity instead of going directly?
Yeah, well, look, first, Swiss private banks, they have been attracting money from around the world for some times now. But times are changing because obviously I think the regulatory framework worldwide has been changing as well, and we need to adapt. So we also need to offer our solutions and services in a regulated way. That's point number one. And point number two, I think also Banksys is a very specific Swiss private bank. We are owned by a family. The bank was founded by Eric Sys back in 1996. His two sons are running the business. And we, one way we differentiate is that we have a very specific focus on entrepreneurs because we are entrepreneurs ourselves. And I think that Eastern Europe, including Romania, is currently the fastest growing region within the whole European continent. There is, and I'm sure you will agree with me, a deep entrepreneurial mindset in Romania. I had the chance to travel several times to Bucharest, and you can feel that there is this entrepreneurial and innovation spirit.
Yes, of course.
So I think it makes sense for us to discuss
To be here with us
with Romanian entrepreneurs.
Look, to go for this what you mentioned here in terms of having the entrepreneurial spirit in Romania, we see it as well. And this is where my question comes to tend to ask you, for example, why do Swiss banks need trusted local wealth manager in Romania to build this relationship with the family? Is it a must to have someone who knows locally the people, knows their families, the trust or whatever? Or how do you work, guys, with other countries?
Yeah, so in many countries, we work through partnerships. Why partnerships? Because we try to offer the best of two worlds. Most of our staff, most of the decision makers, they are based here in Switzerland. We want to be close to where the money is deposited, obviously. We need to work as a team, but obviously we travel to meet with our clients. But there is no aim to open a branch, for instance, in Romania or in Greece, for instance. So the way we deal with this is that we try to find partners who share our DNA, who share our values, and we build a relationship with end clients together with them. And I think this is key because that means that we have this global approach. So we are global in coverage, but when it comes to approach the clients, we have this local flavor thanks to a partner like you.
Absolutely. This is a combination of global safety with the Swiss custody and the local trust with us being next to the families. So I believe in this combination as well. And working with you, Charles, and CIZ is something that is beneficial for everyone and even for families in Romania. So let's go something that is a bit on the global outlook and the macro risks. As a chief investment officer, Charles, you oversee strategies across geographies. So, what are the top three macro risks you see in the next 12 to 24 months? Or it's a long period. You might tell me 6 to 12 months.
Well, it might surprise you, but I think the first risk is not to be invested.
Absolutely.
Because there is inflation. There is still inflation, and inflation is when you have the chance to have some wealth and you want to build obviously wealth for the next generations. Inflation is with taxes is one of the two biggest let's say opponents to the growth of your wealth. So the only way to keep your and grow your purchasing power is actually to invest into risk assets. And within risk assets, I will include real estate, stocks, so international stocks, corporate bonds, gold. And so that's why I mentioned this as a risk number one, because, you could be, in France, in Romania, in Greece, in the US, or even in Japan, there is inflation.
Absolutely.
And if you want to preserve your purchasing power, you need to invest. Despite all of the bad headlines, negative stories that you can read every day in any newspaper or any website. So I think that's number one. I think number two, which is global in scale, is the potential consequences of too much sovereign debts. Global debt has hit $300 trillion recently because most of governments, they had, let's say, no other options than to print money and to grow their financial leverage. And so far, it has been okay. Well, obviously some big accidents like 2008 or remember the European debt crisis.
Absolutely.
But there will be more accidents. As we talk this week, the focus is on France, for instance.
Absolutely. September 8th, I think.
Yeah, they have they have a very fast growing debt to GDP ratio. They are currently facing a fiscal crisis, a political crisis, but this can happen to other countries like in the UK.
This is what we're saying.
Yeah,
Between France and the UK, and coming back to Romania, if we want to push back to Romania, and we see Romania, for example, like how they can interpret these risks as a Romanian when the government is, when the bond yields, the state bond yields 7 to 9%. So it yields as equity return for Romanian. How can Romanian interpret this risk for themselves or for their portfolios or whatever?
Yeah, so in the specific case of Romania, obviously it's never easy to, let's say, diversify your portfolio in international assets when you have such a, let's say, a high
yield
income, high yields on your local bonds. But this is something that many countries have been traveling to have been facing in the past, and although it can last for a while, there is always a risk that suddenly there is some kind of accidents, and you start to face some issues on your local bonds. Or maybe another way to usually things happen is that your local currency start to really weaken against other currencies.
Absolutely.
So I don't know, deploying some of your assets in Europe or in the US, you will get less coupon, but potentially the currency can appreciate against your local currency. So I think this is, I was mentioning global debt as a global issue because that can create volatility. But you move back to let's say the key topic of how to address, let's say, your local bias. I think for any Romanian saver, it makes sense to have some allocation to your local bonds because you get
absolutely
a good yield on your local currency, but it's probably very safe to allocate to other, let's say, geographies, especially on the stock markets. Bond market is a bit different. I think it's good to stay in your local markets, but when it comes to equities, that gives you both, let's say, foreign currency exposure plus, let's say,
inflation hedge or something.
Other, currency.
Charles, what I just like a discussion with you because we have some clients and as well with SYZ and something like we're trying to convince client when the state bonds are giving a yield of 7 to 9%, which is basically global equity bonds, to just diversify it and put it in a portfolio that you can even balance it with the bonds, with the corporate bonds or whatever that are from outside Romania. So basically, and some alternative or whatever. So a lot of structure we're trying to move, not to be very well exposed here. But the question I wanted to ask you now, because you mentioned accident, based on the volatility index now and the short positions that we have in the market, I don't know what you believe, but do we need to be prepared for an accident that can come at any point of time, like in 2022 or something like this, when the volatility is at lowest with the high short on the market or shorting volatility? How do you believe in this?
Well, the thing is that bull markets, so rising equity markets, are more frequent and last much longer than bear markets. So I think this is one of the most difficult thing in investing, is that obviously your fear of losing your capital, and too many of our clients, they are reluctant to deploy their capital into risk assets because they fear exactly what you mentioned. But the natural tendency of global equity market is to go up.
Absolutely.
You need to think about human being progress. Human being is through innovation, through investments, is making progress over time, and the global equity market is a reflection of that. So if you don't invest, that means that basically you don't believe in the fact that human being is going to make some progress. You need to, investing into global equities is one way to get a share of this global economic growth, which has been happening for decades and for centuries. So that means that over the long run, you need to be invested into equities, again, into real estate, into gold, into corporate bonds. But if you want to not suffer too much during period of times when accidents happen, because let's say on average, every 5 to 6 years there is an accident happening, then I think there are some key rules to follow. One is diversification. You need to be diversifying in terms of asset allocation, so bonds, equities, in terms of geographies, in terms of currencies, in terms of instruments, in terms of sectors. So there are many ways to be diversified. That's point number one. Point number two, it's good to be liquid, because at least if you are liquid, if you invest into instruments which are liquid, if you need to certainly put some cash aside, it's possible.
You can mingle, you can do whatever you want.
It's good to avoid leverage, because leverage is usually not your friend when there are bad things taking place. And also you need to look at quality, because one thing which is very difficult when there is market crash happening is to hold your positions, because suddenly you start to panic. You start to panic because when crash happens, usually the headlines are very bad. But what if you are invested into companies that you really believe in? Let's say you are invested into corporate bonds of Nestle. Is Nestle going to disappear? Probably not. Let's say that you're invested into Microsoft stock.
It will never disappear.
Will it disappear? Will it crash 80%? Probably no. So if you know that you are invested into quality businesses, will it be on the credit side, on the equity side, you're probably going to navigate the storm in a much better mood and mindset than if you are invested into instruments or companies you don't know, or you don't know well, or
this is
about.
So basically, Charles, if we summarize this diversification, when you have a crisis, you need to be diversified, search for quality always, and stay invested.
Yeah.
And this is what we see exactly when people panic, and if they don't have someone to advise them, or a wealth manager, or someone like, you can tell them exactly to relax a bit if they believe in long-term portfolio they invested in. And I'm sure you see it, guys, at the back, and we see it as well with clients. You need always to tell them to relax a bit, because this is a long-term investment, and we, especially if it's invested in quality. Let me go back to illiquid investment. I'm sure between you advise families across Europe, especially Middle East, and you know that a lot of people, they rely on properties and real estate. This is something that everyone likes to touch it, that this is my property. So basically, in Romania, real estate dominate the main investment religion, if we want to say it. So what are the advantage or dangers that overlie in this structure if we always focus on real estate? And what are the alternative, or what can we add on this in a portfolio, for example?
Well, I think real estate, generally speaking, is a great investment because it's tangible. It's a great protection against inflation. And also, most of these real estate assets, they pay income. So you were mentioning the Middle East investors. Usually they have a long-term view. They love real estate. If they can see that their real estate are based in, let's say, locations which are, much
location.
Favored and appreciated, they trust that this real estate will not depreciate too much over time, even when things go bad. So they love it, and also it pays income, which is great. Now, I think what is interesting is that, I'm seeing this in all countries, is that in the old world, usually clients were just investing into real estates in their own country, or investing into their own properties. Now you can see that real estate is becoming more like a global asset. And sometimes I say, like for instance, in Manhattan, in New York, currently, the price of apartments are picking up again. So maybe that's a trend that some investors want to play, and there are vehicles to play that. Some markets are very, undersupply at this stage, or maybe are benefiting from strong momentum. We have seen Dubai, for instance, the last few years, kind of picking up in the. So as a global investors, you want also to take advantage of global trends. But it's true that when it comes to illiquids, there are other interesting segments. Private equity is very interesting. Like, for instance, we love European private equity. We're not that fan of European listed equities because, Europe is currently their own issues. And also, exporters are, kind of being penalized by the strong euro. But when it comes to local businesses, non-listed, they're so cheap, so much undercover that we find great companies, with already, being very profitable, that we can buy at very cheap multiples. So like a European private equity fund is interesting. Or we also
saw that you guys are, you have your own, the partners that invested in private equity directly.
Yes, exactly. So that
this is why we invested. We like the fund that you guys have in terms of private equity fund.
Yeah, and the family is invested into this fund. Mark SYZ, the son of Eric SYZ, is running it through his entity called SYZ Capital. So that's something we like. We also like litigation finance. That's something which is totally uncorrelated. So you can have Mr. Trump saying XYZ or Mr. Powell being fired from the Feds. It will not affect the performance of that kind of investment, litigation finance. Very interesting with very nice yields. And also we still believe in hedge funds, the hedge funds are interesting.
Uncorrelated, yes.
Uncorrelated. So trying to find, uncorrelated returns is part of what we like to do because we live in a world where so many things are intertwined. That's being able to find a vehicle, investments which can behave in a different way than the rest is quite attractive to clients.
Charles, when I talk to you, I always you answered 3-4 questions back to back. So I need to jump questions. So and I'm trying, because what I said before, you're talking with Romanian people in their home now. So I'm trying just to bring the global overview even to some local stuff that's happening here. So let's go to the, let's assume, for example, the currency diversification for you guys. How do you think about the Euro, USD, whatever, the Swiss, the UK GBP, or how people should be in terms of diversified in the currency? This is one thing. And second, what do you recommend for people like Romanian people where they have 90% concentrated in RON and euros, and a lot of people, they change from RON, the local currency, to euros after some election. So how do you advise based on your overview in terms of currency diversification?
Yeah, currently we think that there is a downtrend taking place for the dollar because that's a willingness from the Trump administration. It tends to stabilize at this stage, but let me address the big picture, like a general rule. So how to diversify into outside your local currency. I'm gonna I'm gonna tell you what we do with the Swiss franc.
Okay.
With the Swiss accounts, and I will jump back to Romania because the principle to me is the same. Is that Swiss franc, we have, let's say, a very specific issue is that the Swiss franc is very strong.
Absolutely.
So whenever you invest into another currency, the likelihood of this currency to depreciate against the Swiss franc is very high. So what we do for, let's say, cash and bonds investments, although the yield is very low, we stay in our own currency. Because let's say we try to pick some additional yield in euro, we're going to get the additional yields.
But it will depreciate compared to the Swiss franc.
So it will be offset, But then when it comes to equity markets, we are okay to take the risk to invest, for instance, to US equities in dollar. Because even if the dollar depreciates against Swiss franc, the US companies, they are taking advantage of the weak dollar. So here you can see that there is some compensation taking place.
Absolutely.
So I see this as a golden rule, is that you stick to your own currency when it comes to fixed, fixed income assets, so cash, bonds, and then you venture outside of your own currency when it comes to international stocks. But I will do the same in Romania. Why is that? Because Romania, okay, maybe you don't have the same kind of feature than Swiss franc.
Absolutely.
At least you get paid. You get paid when you invest to Romanian bonds. You have very nice yield. You mentioned it before. But then when it comes to investing into stock markets, maybe you can go outside of Romanian stock markets, like the US, the Euro, I don't know, Asia, China, Japan.
Absolutely. And to be invested everywhere in terms of the diversification thing. So basically the Romanian, in terms of currency being pegged, in terms of like being pegged to euros, it's becoming a problem as well for Romanian people. Let's go some cases or some examples. I need to take your views and advice, because I've been asked by Romanian families about these, and by a lot of entrepreneurs, and it's good to hear your voice in terms of what do you think from your experience. For example, if I'm sure you saw the crisis that happened in Greece, Argentina, other countries, but let's consider like it's a question that always people ask us, an entrepreneur, what all the cases where overexposure to local debt, it ended very painfully. So what is the single lesson Romanian investors should take from these stories? Because what we see is every single like couple of weeks we have a new the people are giving me new loans, because you know better than me, state bonds are a new loan for the state. So what is the lesson that Romanian investors should take from these stories, and how they should apply it for themselves here?
Well, there is something that's it all goes down to the governments, and it's something very, very difficult to do. Is fiscal discipline, and I think I was born there, and you know this country very well. Greece,
we know this.
I think it's a very rare example, but a beautiful one. Well, when you travel to Greece, they will tell you that this was not a nice period at all. But they took so much, let's say, efforts and pain to restructure the finance that now it starts really to work. And to the extent that Greece is borrowing now money at a lower yield than France.
Absolutely, yes.
And we can see, and although their debt to GDP is still higher, but they have been really cleaning their house, but it has been, one generation has been sacrificed for this. They will tell you this.
I know, we saw it.
Things are picking up, and you can see the price of real estate is going to the roof. The whole world is going to Greece for holidays, but not only for holidays, also to build businesses. So they go through this very painful period, and then no pain, no gain, So now they have the gains coming, but it has been very painful. And for this, it takes a lot of courage to do so. And again, if I look at Europe, the Eurozone, not that many countries are ready to take these, to do all of these efforts.
Absolutely. I think Greek people are different than other people in terms of assuming or living that more than 10 years of austerity and bad times, because we saw it.
Now, kudos to them. But again, it has been very painful. I remember this time, but now things are really turned around. So maybe, you need to go through that kind of period. And I think it's the good thing with Romania is that you have such, let's say, a bright future with the mindset of people. That's key. You are very well located, very well educated people, very smart, talking many languages. So you have a unique opportunity. But yes, you need to fix there is a need to fix your, let's say, your fiscal situation.
Hopefully we're not gonna be, I don't know, hopefully we're not gonna be like UK asking for IMF anytime soon. But if a country like G7 is asking IMF bailout,
I don't know. If we have France and UK asking at the same time for IMF bailouts,
I don't know who's going to
IMF would have a very hard time. Yeah.
And if Romania is entering in this one, I don't know what they will give to who.
Yeah.
But it's not easy. Worldwide, it's not easy, and everyone has their own risk. And we know we have our own risks here in Romania. But I'm sure, Charles, what we see is there is a lot of psychology and discipline, and how people react to this when they consider when they consider state bond are safe because they're issued by their own state. It's nationalism, patriotism, and this is how a bit of psychology. So basically, if I need to ask you a question, Romanian, but basically, and not a lot of clients worldwide. Why I'm saying Romanian only, but a lot of clients they love to be savers in deposits and bonds. How do you advise your clients, and how you advise the clients they come to SYZ, for example, and they say, look, we don't want to do anything. We just want to be risk free. We want to have deposits and bonds instead of really manage their wealth and manage their own capital with the help of a wealth manager or the bank.
Yeah, but one remark, the fact that you have, let's say, a very large percentage of bondholders being local is also an advantage, by the way. The French, for instance, almost 60% of the French bonds are owned by foreigners. So then, that could be a risk, because if the confidence start to, let's say, decrease, that's an issue. If most of your bonds are owned by, let's say, local investors, that's one way also to stay, to keep the head above the water. So that's a thing.
Hopefully, most of the bonds are owned by local investor. I don't know if it's the same case like Greece, and if the investor confidence will go out, will fail we cannot anyway. So hopefully, this is how it's happening.
No, it's I think it's very natural for clients to say, I don't want to take risk, with the equity market. I want to be invested into fixed income investment
deposits, yes,
coupon and so on. But I think it's normal that there is this education process to be put in place, because we have been living in a world during 20 years with low inflation and even deflation in some countries, and now we are living in the other world with inflation, which is probably going to be sticky. And again, if you want to protect your wealth, that's back to the start of the discussion, there is no other way around. So either you spend now, or you invest into risk assets like equities, or you invest to store values like gold. There is no other way. There are these three ways. And this is why, we try to, let's say, progressively move them from a pure fixed income portfolio to a portfolio which is more diversified with some equity exposure. One way to do it, and I like this as an approach, is called dollar cost averaging methodology. It doesn't need to be the dollar, but the principle is every month or every 3 months, you invest into small amounts progressively into the equity markets. It's a win-win. If the equity market goes up, you already make money. If the equity market goes down, you can buy at a cheaper price.
You average it out.
Yeah, so you smooth out the entry points. And I think anyone needs to do that from, let's say, a very young age. Think about Charles, if both of us would have started investing into the S&P 500.
I wish.
Even a small amount every month, from 18 years old, we probably would not need to work anymore. It's
absolutely. So this is why, Charles, I wanted what we believe in Romania, and we believe Romania in 2030. We believe Romania will be in one of the top countries in Romania in Europe. And second, we are always. And with your help as well, guys, you entered as well. We're giving free wealth management courses for young generation, and Martin was here with us as well, and he was telling the young generation, because we believe in young generation. I never learned wealth management, neither you, when you were 16, 17. We didn't know exactly what does wealth management, what is wealth management. So I want to before I close this, Charles, I know that you have a lot of things. Before I don't want you to just give some advices for a 20-year-old Romanian just starting financial education. What would be your first principle of resilience to teach him or to tell him, for example?
Well, first, back to your wise words. I think like personal investing should be uh, a compulsory course at school.
Absolutely.
It's just for your own, let's say, safety. Being educated on why you should invest and how you should invest, because you then put yourself in a much safer place if you start to learn on this very early. That's point number one. Point number two, talking about investment, I think for young people, I have kids, I have 3 kids, and what I always tell them is that your best investment is to invest into yourself, because everything starts with education. So I think that your initiative to give free teaching is fantastic, because anyone who is listening is investing into his or herself, and that's the best investment you can do. Then I think that another thing I tell to my kids or to the young generation is that try to go out of your comfort zone, because we live in a very difficult world. It's a super competitive world. Yes, it's plenty of opportunities, but it's a tough world.
It's a competitive, yes.
Yeah. So you need to go out of your comfort zone to try to build this resilience, to become anti-fragile.
Absolutely.
Become even stronger, during adversity, because there will be a lot of adversity down the road. So I think that's key, is to, open your minds, do new things, every day, try to learn something, try to put yourself in a difficult situation to build this resilience and this ability to withstand, tough times.
Absolutely. And I will add something on what you said. We always tell the young generation, you need just to start by something. You just need to start investing. Put something, put 1% of what you have or what you got from your parents, put it somewhere in an ETF, S&P. If you don't see it already there, you will never know exactly what does it mean. Exactly. But you need to start somewhere. It's not only in the teaching and learning and whatever. You need to start somewhere. This is for another question I want to ask you, for Romanian entrepreneur, for example, who sold the business now, 10, 20 million euros. What are the first steps you recommend for this entrepreneur to protect to structure his wealth, for example?
Yeah, but I think you mentioned
investing.
Yeah, I think that it's like many things in life. It's all about having a plan.
Absolutely.
And the first plan is wealth planning. What structure, trust, company, or just, personal money. Then how to handle the tax issue, how to handle the inheritance,
absolutely,
issues, governance, who's going to take care, say, of the assets. And then you need to build a strategic asset allocation. What is the plan? Look at what is your reference currencies, what will be your cash flow needs, what is the time horizon, are there any specific constraints to take into account? Once you have, let's say, tackled all of this, then you can start to look at the market and see how you're going to deploy your assets. But if you don't go through these very, let's say, important steps, then you put your own all wealth at risk.
Absolutely.
So in, let's say, non-investment issues that needs to be covered, and I'm sure that you can help them.
Absolutely. Charles, I want to thank you for your time today. I want to thank you always to be next to us, next to Romanian families, we read always your research, your notes, and we hopefully in September, October, we're gonna welcome you back here.
I'm waiting for the invite. When can I come?
We're gonna give you an invite very soon. Very soon. Just wait for it. Charles, thank you so much, and see you soon.
Thank you so much, Charles.
Thank you. Bye-bye.
Bye.
This podcast is just the beginning. Over the coming month, we will bring more leaders, bankers, strategists, economists to sit with us, not above us, and help Romanians' family navigate what is coming. Because protecting wealth is not about secrecy or privilege anymore. It is about clarity, education, courage, and structure. And together, starting today, we are building a new financial culture for Romania.